been an extremely weak start for the Indian market. All sectors trade with deep losses. The Nifty slips below that 17,000 mark, held around that 16,900 mark, down 200 points. It's led by across all sectors. Weakness in metals, IT space. The Nifty bank lower by about 450 points as well. Mid-caps fare worse off than the headline indices.
Metals continue to fall as global banking crisis unfolds. The Nifty Metal Index is down close to 2%.
Adani Enterprises, the top loser on the Nifty today, on reports that it's suspended work on a 35,000 crore petrochem project in Mundra. The company spokesperson tells CNBC-TV18 that they will be evaluating status of growth projects in primary industry vertical over coming months.
Oil marketing companies outperform in an otherwise weak market after crude prices hit 15-month lows.
Cochin Shipyard surges after securing an order worth nearly 550 crores for 2 container vessels from a Netherlands-based company. Hello and welcome. You're watching us here on Chartbusters, back with a new week, and Nigel comes back from his holiday as well. So after a long time, Nigel, both of us busting the charts. What's not busting the charts, however, is the market itself. 200-point downtick at the open, with 3 stocks declining for every stock which is advancing in the broader markets. The question is whether we see some support at the erstwhile levels of 16,850 or not. Because remember, around September, we did see that big outperformance rally, and that happened from these levels itself, 16,750 to 16,850. Nigel, welcome back.
Thanks so much, Mangalam. Good to be back. And in fact, I was wondering what went on in the markets. We went down to 16,850, but from Thursday onwards, some bit of a recovery. I think I left when we were at around 17,450 odd. Let's get in Shivangi Sarda, who joins us to help us out with a fresh trade on the index. Hi, Shivangi. Good morning. What would you do? We're reaching those lows almost there that we saw a couple of sessions ago, and from there we saw a 250-point recovery. This time, do we bounce from there, or do you think we're going to break that level?
Good morning, Nigel and Mangalam. Thank you for having me on the show. So we've seen that Nifty has been in pressure from the last 4 months. Continuous selling can be seen, and follow-up selling can be seen after the breakdown as well. So, the overall market is quite a lot in pressure. India VIX has also in its higher zones, and it is not cooling down. FII's long-short ratio, that is also at its yearly lows, which is at around 10.2%, which we saw last in June 2022. So overall, the market is quite a lot in pressure, and we could see a little more, declines through, 16,850 would be an important level to watch out for. But then we could see declines towards 16,700 levels as well, with a resistance near 16,950 levels. Now, talking about Bank Nifty, this index has also been in pressure, and despite a little bit of a recovery in Friday's session, we've seen that both the indices have not been able to sustain at higher zones and seen a decline from thereafter. Even the global bourses are weak, and they have had a pressure on our market as well. So talking about Bank Nifty, we could see a little more downside over here as well towards 38,500 levels, with a resistance near 39,250 zones.
All right, Shivangi, individual stocks, what do you have on your list for us today?
Yes, so for stock specific, the first stock that I have chosen is GAIL. We've seen that in this kind of a market, we need to be with stock specific action and sector specific, which is moving and which is outperforming the broader market. One such space is this one, which is resilient despite the market volatility. GAIL has been making higher lows on weekly frame, and the base is gradually shifting higher. The stock took good support near 91-93 zones, and thereafter we've seen that follow-up buying can be seen at every small declines. So although on the daily frame it has been consolidating from the last 8 sessions, but the setup is quite positive, and with this support we are recommending a buy over here with a target of 114 levels and a stop near 108. My second pick would be a sell call on Eicher Motors. We've seen that this stock has been trending southwards from the last 5 months, and selling can be seen at every small bounces. Now, we've seen that there has been a breakdown on weekly frame last week, and then fresh selling can be seen at the at any bounces as well. So the short built up can be clearly seen, and the declining put call ratio indicates that there is a room for a more downside over here. So recommending a sell here with a target of near 2800 and a stop loss near 2975.
Okay, all right, Shivangi, always good having you on the show and hearing your thoughts. Thanks so much for joining in and giving us your view on the index, as well as a couple of stock picks. Well, let's turn our attention to the special segment where we get you a few ideas for profit from Money Control Pro. Lekha of moneycontrol.com joins us to talk about a stock that she's tracking closely. Lekha?
Yes, so we are positive on Krishna Institute of Medical Science, that is KIMS Hospitals, as a play on the structural demand trend for the healthcare facilities in the hinterland. KIMS expansion strategies remain on track as it is successfully deploying capital to expand its geographical reach and is investing around 350 crore of capex in FY23 and expects a similar rate of investment in FY24. Now, the company is working on brownfield projects to set up hospitals in Nasik and Bangalore, which should become operational by FY25. Now, in its last quarter results, the margins at the recently acquired Sunshine and Kingsway hospitals stood way below the 30% EBITDA margin bracket for its mature assets. But KIMS has an excellent record of turning around its acquired facilities, and the management aims to ramp up the operational performance of all the new entities by FY25. We like the management's aggressive expansion strategy, and we believe the turnaround in Kingsway and Sunshine hospitals would be key growth drivers. KIMS is also a company with a strong balance sheet with a net debt to equity ratio of just 0.04 times, and its return on equity and return on capital employed remains the best amongst peers. The stock is corrected around 12% year to date and is trading at an EV/EBITDA of 16 times over FY24 estimates, which is at a discount to its peers. Now, with strong growth prospects in the hinterland, given the limited institutional healthcare facilities, we see the current weakness as a long-term buying opportunity.
All right, Lekha, thanks a lot for that. With that, we'll simply do a short break, but don't go anywhere. On the other side, we'll be joined by Dinesh Gandhi, who's from Godavari Power and Ispat, to discuss their 250 crore buyback approval and a lot more. Stay tuned.
Welcome back. Well, a bit of a pullback is what we're seeing from the lows, but that's getting sold into as well. So let's see whether or not we can pull back a little bit. There was an attempt that was made, but that got quickly sold into. Well, let's invite our first management on the show. Then we have Godavari Power. Well, they have approved a buyback of around 250 crore rupees. That's at a premium of close to 28% in comparison to Friday's close price. The company is also in process of expanding capacity at a capex of close to around 1,000 crores odd. To understand more details on these fronts, well, we're joined by Mr. Dinesh Gandhi, who's the director at Godavari Power. Hi, Mr. Gandhi. Good morning. Thanks so much for joining in. Well, let's get a couple of aspects out with regard to the buyback first. One, will the promoter entity participate in this buyback? And point number two, any reasoning that you'll price the buyback at such a sharp premium, 25-30% higher? Go ahead.
Thank you, Nigel. Thank you for having me on the show. Coming on to your first question about the promoters' participation in the buyback, the promoters will definitely pass. The buyback is through the tender route, and all shareholders of the company, including promoters, are eligible to participate. And promoters have given their indication that they will participate into the buyback.
Okay, and what about such a pricing?
Coming on the pricing front, see, Godavari Power has been trending in the range of say about 250 to about closer to 597 for last 1 year. The highest it is traded as 497. So we thought that the highest price that the stock has traded in recent past should be the basis wherein many retail shareholders would have entered the stock. So they will get an exit, and there will be a reservation for 15% of the buyback for the retail shareholders.
All right, so that is considerate of you. But you know what I wanted to understand from you is that with this buyback, two parts. One, with this buyback, do we rule out a dividend, if at all? And secondly, you have a capex plan of 1,000 crores. You've spoken about this in the past as well. The cash on your books, I see, is a little over 500 crores. So 250 crores goes away from in the buyback. The remaining 250 crores, your capex plan of 1,000 crores. How do you fund that? Do you plan to take on some debt?
Yes, good morning, Mangalam. See, coming on the buyback, yes, definitely the buyback will be funded through the out of the existing cash balance. So far as our expansion plan is concerned, see, the expansion plan is still, by the time we go into implementation, we have to still get the environmental approval. And once the environmental approval is received, then we will be, going into the capex mode, and that will take 18 to 24 months for the setting up. And as you are aware, company is generating in excess of 1,000 crore cash every year. So we will have sufficient funds to, fund our expansion plan looking at the current market conditions.
And no dividend, right? Now that the buyback has
No,
happened.
dividend will definitely be there. It's not that no
Okay.
dividend will definitely be there.
Okay,
As
so
far
you're
as
saying,
dividend policy.
so you'll find the buyback via internal accruals. Dividend will also continue, and so you're fairly confident, and most of the capex will be funded by internal accruals as well, right?
Yes, that's right.
Okay.
That's right.
All right. So we've got through with the buyback news then. Now, there's also been an overburden dump, or in simple terms, there was a bit of an accident that took place at one of your mines, the Ari Dongi mines. Could you
Yes.
tell us what is the update out there, Mr. Gandhi? What is the status now? By when will production normalize? You all have mentioned you have some inventory of iron ore, so you can use that to make pellets. For how many days do
Yes.
you have that inventory? When does it stabilize? Go ahead.
See, as we have made the announcement last week, there was a dump of the iron ore at our Aridongri mines, which has fallen maybe because of the blasting which takes place because of we are still trying to find out the exact reason, and I've appointed a technical team in order to look into that matter, why the dump has fallen. Now, so far as current mining is concerned, we are still able to operate the mine at about 50% of the regular operations, and that should continue for couple of days. By the time we are able to assess the overall situation and decide the next course of action, so we will make a suitable announcement in due course of time.
So
Once we get the report from the
So,
technical.
Mr. Gandhi, just to clarify, for now you'll operate the mine at close to around 50%, right?
Yes, that is where it is operating currently.
You have inventory for how many days you said?
About 3 weeks.
About 3 weeks. Okay. So if this doesn't get resolved, then you'll have to resort to buying iron ore from the open market?
Yes. It doesn't
That will come
resolve,
at a
and we will have clear situation emerging in next 2 to 3 weeks time. By the time we'll be able to, update the market on that.
And what is the typical price difference between buying iron ore from the open market and you producing it yourself?
It is currently about 1,500 rupees a ton.
Ooh.
All right, 1,500 rupees a ton. So that perhaps would be a hit directly taken on your EBITDA. Just wanted to understand the realizations for pellets. Third quarter was close to around 80 to 184 odd rupees. The same time last time it was close to 10,800. So it's been on a downward trend. Where do you see it in the fourth quarter and the near future?
See, current prices of iron ore pellet in domestic market is close to about 10,500. And we continue to sell the product in the domestic market because export is at a lower than the domestic prices. So we are continuing to selling, and we looking at the reopening of China, we are pretty confident that this kind of prices should help for near term.
Okay, all right. Final couple of questions then before we let you go, Mr. Gandhi. We had Abhishek Agarwal who joined in earlier, the promoter entity, and he had mentioned that margins he is expecting it to stabilize in 18 to 20%. Do you think that is doable? That's point number one. And also, Mr. Gandhi, exports, they were expected to resume from quarter one FY24. Do you think that it goes back to say 20-30% of your total mix, or are you still satisfied at current reckoning to sell in the domestic market?
See, as Abhishek told you last time, the margin will continue to be in the range of 20%. In fact, in the current quarter also, the margin will be better than the last quarter, despite we shutting down our sponge iron and other value-added facility, because 100% of the pellet is getting sold and the prices are better than the last quarter. Current ex-plant realization are close to about 10,500 rupees a ton. And if you go in the export market, the prices are still lower on ex-plant basis because of the expenses involved in the freight, etc. So, if I say sell in the export market, my ex-plant realization will not be more than 10,000 rupees a ton. So it is better to sell the product in domestic market as of now. Till
All
the
right, so you will
market improves, yeah.
And margins, you said 18 to 20% holds, right?
Yeah, margin will be close to about 18 to 20%.
All right, and this despite the current situation that you're in, where you may have to buy iron ore from the open market.
No, I'm talking about the current financial year. Next financial year, we'll have to assess the situation on the mine. I think we'll have more clarity in next 2 to 3 weeks, and after that, we'll be able to guide.
Okay, we'll have to, wait by for this. I think this is going to be an interesting one with regard to that mine, because you're getting most of your iron ore from that particular mine. If it's shut for a longer duration, then it could hurt you all. For the time being, though, you're sitting on inventory for 3 weeks, so it'll hold you in good stead for now. All right, Mr.
No, in fact, I was saying that I think the more clarity will emerge in next 2 to 3 weeks, and we are confident that it will not go very long period of time. It might be there for a couple of months, but it won't be very, very long period of time.
We'll wait by for your communication then, Mr. Gandhi. Always good hearing your thoughts. Good to hear that pellet prices have recovered to around 10,500 rupees. You're holding on margins of around 18 to 20%. We need to see how this captive iron ore mine situation plays out. For the time being, the stock is more or less flattish, but in the last 1 week or so, post the announcement that they could consider a buyback, the stock had jumped up close to around 3.5 to 4%. Slip into a short break. On the other side, we'll continue to focus on markets and stock-specific action.
Welcome back. There is another attempt at recovery. Let's see whether this gets sold into or not, because that's been the big concern, right? All recoveries from lower levels have been sold into more vociferously. The Nifty is up about 30 points from 16,900 where we started the show. But this recovery has been led by the Nifty Bank, which is up a good 100 points from the time when we started the show. That has been led by HDFC Bank. In fact, HDFC Bank has moved closer to the higher end of today's trading range. While still in the red, it has recovered. Both HDFC Bank and HDFC Limited, the twins, are supporting the Nifty as we speak. Axis Bank is the other one which is supporting the Nifty Bank. From lows, it has recovered about 1%. Still again sitting with a cut of about 0.5%, but it has moved higher. So we'll keep an eye out on whether this recovery sustains or not. Meanwhile, just keep an eye out on the oil and gas space. CLSA has released an interesting note on the oil and gas companies. Sonal joins in with the details. Sonal.
Thank you for that. Well, CLSA in its note says that how these city gas distribution companies tend to benefit from falling spot LNG prices. Now remember, they had surged to levels of around $45 to $50 per MMBTU back in 2021. They have tapered down from there, and now they have almost halved from December 2022 peak and currently trading at $14 per MMBTU. So they say it's a clear beneficial trend for most of the Indian gas names. Gujarat Gas, IGL and MGL, all three of them, after seeing margin pressure in Q2 and Q3, should see some recovery in Q4 right now. Additionally, Indian gas demand or LNG demand, that has also improved after falling for months. It has improved by 2 to 3% on a month-on-month basis, and higher demand is something which will drive a recovery in terms of volumes as well in Q4 for gas utility companies, the likes of GSPL, Petronet LNG and GAIL. For GAIL, additionally, there's another kicker, and that comes in the form of tariff hike, which is expected in next 2 weeks. The expectation is of a 50% tariff hike, which will drive multiple EPS upgrades for the stock. So that is the next trigger we are watching out for GAIL. But generally, the gas sector is in a sweet spot right now.
Okay, all right. Thanks a lot for that. Sonal, well, Canfin Homes has appointed Mr. Suresh Srinivasan, the ex-head of housing finance at Bandhan Bank, as its new MD and CEO. Abhishek joins us to run us through a quick analysis on that. Abhishek?
Well, it's a good hiring being done by Canfin Homes. Mr. Suresh Srinivasan Iyer, he's the now MD and CEO of Canfin Homes. So the tenure is of 3 years. However, it can be extended by 2 years. And as you mentioned, Suresh does come from Bandhan Bank, where he was heading the housing finance segment over there. However, it's also crucial to note, he comes from the pedigree of Group Finance. So from Group Finance, he went into Bandhan when the merger was done. And in Group also, he was in one of the core team member over there. So the biggest challenge for Suresh, however, will be the fact that to hire and get new talents on board, because many of the current talent is actually leaving for a peer company on account of better wage. Back to you.
All right, Abhishek, thanks a lot for that. So that's about Canfin Homes. The stock mildly under pressure, but that's how the market has been as well. Just keep an eye out on a couple of these gainers, however, from the broader markets. It's usually the defensive names which are doing well. So we have some, buying coming by in Colgate, Godrej Consumer, mildly outperforming the FMCG industry. usually seen again as a defensive during times of volatility. We are seeing, some purchase in these gold financiers as well. Muthoot Finance has moved to the high point of trade, Manappuram as well. Again, gold is seen as a flight to safety, and gold prices are at a record high. So let's see how that pans out for some of these gold financiers too. We are seeing some purchase in the oil marketing companies, HPCL, IOC, BPCL, all of them higher because crude is at a 15-month low. So by and large, while the markets are weak, they continue to remain weak. 3 stocks declining for 1 advancing. Let's see whether we see support around that 16,850 mark once again or not. With that, out of time on this edition of Chartbusters from Nigel, me, the entire team. Thank you for watching.